That was very interesting. I mean, I think one of the issues, I'm sorry, just a quick question here. In this region, when we talk about the FinTech ecosystem, and you talk about startups, most startups are in dire need of cash, from my experience. The very definition of startup to me means I need cash. I've got a business plan, or I've got an idea, not necessarily a business plan, but I've got an idea which I then want to implement by way of a business plan. But to implement that business plan, I need cash. And the fundamental issue that I find in this region is that the people with the money tend to have very short-term views of what should be done with that money. They expect a return. And startups, by definition, burn capital very quickly. And the perception in this region is that a startup is pretty much a bottomless pit. And people would rather put their money into what you specialize in, which is realty, property, right. Because they can see rental income and they can see potential capital gains. And that's pretty much the brand of this region at the moment, because it's very intensively based on property and that kind of asset base, as opposed to what you're looking at, FinTech. So, given your experience in Scandinavia, Northern Europe, the companies that you work with, my question is, what is the distinguishing factors between those regions and where we are today in the UAE? Because the people in the audience will appreciate that there are initiatives and drives from the government here, and if you look at the DIFC, the FinTech Hub, similar initiatives in the ADGM in Abu Dhabi, and to a lesser or greater extent in Saudi Arabia, where we are trying our very best to diversify our local economies, with FinTech being the key driver. But is it necessarily working, because we still live in that short-term mode of thinking? But how do you, just as a question, how have you addressed that in the regions you operate?
Well, we operate in 6 European countries, and now also in India and in Turkey, so whatever is our area where we operate. I would say that it's much easier to get the first rounds of funding in Nordic countries. People want to try out, they want to learn. There's a very active angel network in all of the Nordic countries, and they are the ones putting in the first tens of thousands, or maybe the first hundreds of thousands. And they are there to learn and to do good investments. And that kind of society is less active in many other parts. Then the later stage, or like how we operate, we always engage the corporations. So the banks are the first customers, and that's when we invest into startups. And most of our average age of investment is 24 months at the moment, and we've done to the whole portfolio, it's 12x so far for the 2 years. And the best ones are like really good. And if somebody says that it doesn't pay to invest into startups, I say that 2 years and 12x. So it does. But only if there's a collaboration between the bank and the startup. That is the winning combination from an investor's perspective. If there's no engagement from a bank, we don't invest.
Here again, there's a big application of for the startups. It completely reversed the concept of IPO into an ICOs. So initially, like for the IPOs, you have to have a history behind you of a business operations and all that, banking and all that. But when it comes to the blockchain startups, it's absolutely a reverse cycle. So they go to for the crowdfunding as an ICO, initial coin offerings, just another word for the IPO, initial public offerings. So as a startup, we go to the crowdfunding for the private funding, like in the very beginning, that this is what we have to offer to the world as a technology, and this is the team, this is the timeline when we will be able to complete this project or offering, and we need this much at this cost. Like we offer the security at the very beginning, which we can't claim it as a security because it's a utility we are providing to the world. But at the same time, they see the value in that utility and they start funding the projects of blockchain. And last 1 year at least, there are like every single day there is a new ICO coming up, which is again the thing which I just mentioned in my presentation, that we require a bubble burst. A lot of fake ICOs are appearing thick and fast because it's easy money for them. You are earning hundreds of thousands of dollars, or gaining that, you're doing the acquisition of that from across the globe. People who are seeing the value, okay, they are funding it, but at the same time, you're not sure that that project will be a legit project and that will kick on eventually according to the roadmap. This is happening, and this is again a challenge for the world of blockchain. But this is absolutely a reverse format. Startups are enjoying early fundings in the blockchain world.
Thank you. I love, Sunil, that you talked about capital, because I think if you want a successful ecosystem and you want a lot of startups to come out, there absolutely has to be a lot more capital. And especially in the Middle East, there's a lot of money that needs to be deployed, but the mindset is still very short-term returns, and that's just not how it works in the startup world. But what Mubtala Ventures is doing with SoftBank and getting so much stake in Silicon Valley companies, that's what's really going to build it out. One thing I would say, that I work with a lot of startups, I've been at startups and I advise a lot of startups. This is a long-term process, and a lot of them do fail. So that's why I think it's very important for this asset class to have a lot more capital being deployed to it, a lot more angel investors to be really comfortable with the idea, and that's how the ecosystem and innovation is going to come.
Great, thank you. I think to be fair, to look at it holistically, I think we're quite fortunate for those of us based in Dubai, because we do actually have a visionary leader, and there is the concept of smart city Dubai. So blockchain technology in the context of Dubai land transactions is something which is definitely at the heart of thinking in this region. And more generally, when you interface with the government here, there is a move to digital technology. From my practice, I'm a corporate lawyer by trading. Most of the investment I see from regional investors is in payment processing, as opposed to the broader fintech. A lot of it is about investing into regions where effectively you're merging mobile phone technology with banking, and that's where the disruption's coming in. But that is very, in my view, quite sexy in this region, because I think that the investors here understand that, and there is a quicker return on that, because you take a cut from the payment processing, a very small cut, but it's applying the same principles at Visa and MasterCard, and the local banks understand that, and they're quite willing to partner. Your point about banks partnering with startups, the local banks definitely get that, because that's a model they understand. I think where we are a little bit behind the curve is when we go beyond, when we talk about fintech, what exactly are we talking about? Are we just talking about payment processing, which is generally speaking my exposure to fintech, to be frank, or is there something else beyond that where you see fintech evolving? Like you said, where are we heading with fintech? Is that something you guys have a view on?
I think fintech is such a broad term. How I think about fintech is anything that touches money, right? So I've been in lending, that's fintech. We're online lending. If anyone's familiar with Goldman Sachs, Goldman Sachs, which has always been a big investment bank, is now into the lending space, and they use that as their fintech platform. So how I think about fintech is wherever money is being touched in and money is being moved, and also the innovation that's coming in. So whether it's payment processing, whether it's lending, blockchain technology, compliance, regulations, every single thing that touches any sort of money transfer or money movement, any innovation that's coming out of it, that's how I think about fintech. And it's a very broad term, but that's basically just modernizing the systems and modernizing our processes.
Our interpretation of fintech is that it's anything that banks can make money with. So we are involved with renting cars. We are involved in AI projects, something that changes the bank processes, makes the bank's operations smarter. There's one good example is a company called Asteria. Asteria does smart cash flow. So they do budgeting for small and medium-sized companies. And it's linked with the bank account, and when there's a difference between the budget and the reality, they get notified. Also the bank gets notified, and then they can offer products or services to the SME and because it's something that they need acutely, then the price for the money is much higher, meaning better business for the banks. But the whole idea behind this is that they see the current status of the SMEs all the time, and they get the big data, and that's the way to create new products, new services for them. So it's the big data that is the biggest thing combined with AI, and then, like I said, I don't even know what banks are or what the financial institutions are. It's something that they make money with.
Right here, with the blockchains, like if I see the blockchain with the FinTech application, so there is like a lot happening, and again, as Antti mentioned, it's not just about blockchain itself. We are also coming up with the AI, features of AI, to bring up the infusion of both technologies. We are also bringing the IoT for this FinTech. So a solo effort of any one technology is not going to give big results for the FinTech. Yes, infusion of different technologies, big data, AI, IoT, plus the blockchain, all four combined. Yes, we are into the economy's new phase, which is 4.0, and these all four are the drivers of that economy 4.0. So that's where like the idea is that don't consider as these technologies as solo drivers. They have all need to contribute to each other and take things forward for the FinTech world.
Thank you, that's great. So we went a bit off piece there, but I thought it'd be helpful just to talk a bit more about the ecosystem, as it were, for successful fintechs. But we could hand over to you to talk about crowdfunding in the context of real estate and your experiences to date. So please take the floor. It's for you.
So I'll tell everyone a little bit more about Royalty Shares. Is anyone here familiar with the Lending Club model? It's like the big fintech company. So Royalty Shares, what it does basically, it's in the lending space, but we crowdfund it. So let's just say we have a developer, and it's only for commercial real estate. Let's say a developer comes up to us and they're like, all right, I want to build a mall in Las Vegas. I need $5 million. They can actually put that property up on our crowdfunding website, and individual people would put in money for that development. So if someone put in, if it's a $5 million raise, if someone put in 50,000, they get that % of returns. So if we charge the developer 10%, we take a 1% servicing fee and then give it to the investors who put on it. And crowdfunding is such an interesting concept because there's something like Kickstarter and all these interesting companies that are out there who would have such a hard time raising money are now able to raise money because of crowdfunding. They have access to a big network of people who are interested in that product and how they can really raise money off of that and get the ground hitting. So that's what Royalty Shares is about. I'm happy to take specific questions, but basically think about it. If you're a commercial real estate developer, you want to build an office building in the middle of Dubai and you need $5 million, instead of going to a bank and asking them for a loan, you can actually put it up on a crowdfunding website and get individual people to invest in that company, and then you can give them returns. And actually, just to talk about the asset class, that's a very interesting asset class because a lot of people see returns coming in right away, compared to deploying money to startups and compared to being an angel investor or a VC. So we have seen a lot of success with that product. We're only US based right now because crowdfunding laws are very, very regulated in US, and we can only target accredited investors because property could not get built or they could lose their principal. But this is something that we're seeing a lot of momentum in. So we're excited about the industry.
Great. One of the issues that investors have is understanding the investment risk in some of these projects. And I like the disruptive nature that somebody can plug into the crowdfunding and share the risk, to be fair, but as a facilitator of that investment, how do you, through your model, put across to the potential investor the nature of the business, the risk associated with the construction project or the mall or wherever that's being delivered? Do you facilitate that, or is it?
Yeah, absolutely. So the problem with, and maybe I don't want to use the word problem, but US is very regulated. And it's regulated for a reason because they want to save the normal public. So since we're regulated, the crowdfunding industry, SEC does require us to mention every single disclosure that, hey, make sure you know that this property may not get built. Make sure you know your 5,000 is actually, there's no guaranteed return, and you may not get your principal. So we abide by all the regulations and rules, and that's why we only target accredited investor. So there are two types of investors that you can have. You can have a regular person, let's just say, who makes $100,000 a year. If they want to put in $5,000, we should be able to do that. But SEC in the United States does not allow for that, or you have to do a lot more filing. So this goes more to compliance. So the investors that we target are accredited investors. And accredited investors are people who have a net worth of at least $1 million. And they're the only ones who can invest on our platform because they're the ones who are financially sound, that in case the investment doesn't go the way that it does, they're not going to lose everything. And the thought behind SEC is that they're financially sound, and also they're pretty wealthy, that they would have other like accountants or lawyers to advise them the right thing. So we definitely make sure that they're aware of the risk that they're taking. But it's not just from the goodness of our heart. It's a very regulated industry, and SEC requires us to do all these disclosures. Yeah.
Great. Yeah, I mean, we actually see crowdfunding in the UAE as well. I mean, there is one particular, you've all probably heard of Beehive, which was incepted here in Dubai, and is now regulated. But we're lagging slightly behind in terms of, there is a perception, I mean, you were talking before about the blockchain enabling more regulation, particularly when it comes to, let's talk about anti-money laundering and fears around the movement of cash. I mean, one of the topics that I'll talk about later in the afternoon is the tension between the regulator and the regulator's perception that some of these forms of fundraising or collecting cash can circumvent traditional bank due diligence. And I think there's a little bit of misunderstanding between the market, between the regulators and the people who raise funds, between how blockchain works or how your model works in terms of transparency and being able to verify source of funds versus the traditional banking model, which is obviously document intensive and generally involves KYC checks and paperwork and certification of paperwork. And obviously I'm a lawyer, so I fully understand it. So, but just to the floor, I mean, you clearly think blockchain is a facilitator for more compliance. I guess the majority of people in this room would agree with that. But are there people who actually see any risks in this vis-a-vis the traditional banking model?
Yeah.
Any views on that?
Yeah, absolutely. I think the good thing is that government is usually much behind that innovation. So a company like Uber, if government knew what they were doing, they wouldn't even let them start it, but they actually started it themselves, and there were no rules or regulations out there. For me, I feel like US in general is much more regulated, and that's why a lot of startups, whether it's blockchain or anything else, would actually go to Asia or Middle East or other countries where they're not as stringent regulations, because regulation sometimes does hinder innovation. So that's kind of my thought there, but I think the government is kind of catching up and the regulations are catching up, but the startups are moving much faster. So I do expect a lot more innovation coming out of it before a lot of rules and regulations are put in place.
I'll just use this like a case study for the uses of blockchain is very powerful. Like, for example, if all the stakeholders of this project are on blockchain, it will provide the KYC, know your customers, at an efficient level. If I'm already there as a trusted person with all my background of financial background on the blockchain, it's very easy for her company to like facilitate my transaction. Similarly, all banks which are regulators, the governments, if they are all on blockchain and they are having a trust on that information, that is the thing which blockchain is providing. An infrastructure of a trust, facility at an efficient level. So this is the biggest use case of blockchain. That's why we are not saying that blockchain is an enemy of a financial institution, and gradually things are moving otherwise. But now the biggest users of blockchain is the financial institutions itself. They know the value of this technology. Since the very beginning, they are like having an issue of fraud, and blockchain is one tool they can use to disrupt that nature of their operation. That this is the biggest issue they've been having since centuries, and now this technology gives them a chance that they can come up with the solution of anti-fraud, anti-money laundering, because everything I mentioned in my presentation that timestamping is there. You can trace a block happened in 2009. A transaction happened in somewhere in the world at that particular blockchain, and you can dig it up at any time of the life, and you can trace it. Who did that? There is anonymity, but at the same time there is a traceability, trackability, which is very sound, which is very accurate, and you can build up your whole business model on that.
I would just add one more thing. I think data is such a key, and that's what blockchain provides, right? It's a lot of data and a lot of transactions and every single thing you need to know about a transaction. And I think that's why that's going to be the future. Everyone knows that. It's just really, it's going through a stage where there's going to be a bubble and then it's going to go up. One more thing I would add is it's very important for banks to get on board, because it's very hard to be successful in the industry if the biggest players are not there. And I think now the banks have started noticing it. Goldman Sachs just started a Bitcoin trading desk. And those are really the kind of things that are going to bring innovation to the industry, when big players start taking notice of it and get involved in the innovation.
Great, thank you. I think you're right there. I think I'm going to hand it over to the floor. But just as the last message, I think in this region, obviously, we always regard oil as being the key to wealth, and we have done for the last 40 odd years. I think going forward, it's data. Right. Whoever owns the data and controls the data is the king, and I think that's probably the shift in the dynamics here. That be due to fintech innovation, data is probably the most important thing to enable this sort of technology and to make it a success. From what you're saying, so on that note, I'll just hand it over to the floor for any particular questions. Feel free to reach out.
Hi, this is Fatima from Iran. I have a question about the crowdfunding. I come from a country that we have the risk of the corruption and for the financial institute. And the problem maybe is not the risk of the investment. I have the question about how you analyze the company, how you choose the company, because I know as an investor that maybe I lose my money for the risk of the job, but I have another risk also. Maybe they just come to take money and escape.
That's a really good question, and I think one thing that really sets us apart is how we underwrite the investor that we're going to give the money to. So we have a very robust model, and that's the technology in the company, and that's the technology in Lending Club and other companies too, is how do you underwrite the person that you're giving money to. So if you're an investor and you want to put in 5,000 of this property being built in Dubai, the borrower, the $5 million that we're giving to, we look at their financial statements, we look at their previous properties, we look at whether they've filed any bankruptcies, have the previous properties been completed on time, were there any issues with the previous properties, and before putting that asset up on the crowdfunding website, we first analyze them, and then we would put all their detail there so the investor can read through it as well. But our rate of acceptance is less than 5%. So we only support 5% of the top companies, based on how financially sound they are and what kind of investments they have had. So we do a lot of risk diligence from our end, because we want to make sure all our assets are really strong, which is how the company is going to grow.
Sorry. Then about the cash flow, you just supervise the cash flow, or you transfer all the cash to the company?
We do transfer all the cash to the company, but then there are a lot of different processes that we have in place to make sure it's going to the right company, to make sure they're building what they told us they'll be building. So we have a lot of staff on site who will go and see the projects that are being built. We would also give monthly updates to the investors. So if you put in your money, you will know on a monthly basis exactly how far the development is, where is it. A lot of our assets are also not being built from start. A lot of our assets are already built and they're just remodeling or they're just building above. So those are the kind of updates that we provide on a monthly basis for our investors so they can see exactly where the money is.
Any more questions for the panel?
Hi, Mohammed. I'm Apurva from Spock2 Solutions India. So you mentioned traceability as one of the application's key features of blockchain. So I just wanted to allow you to elaborate on the application or how is it applicable in the area of traceability if I talk about the financial institutions or the banks.
Yes, thank you for a very good question. That how a traceability feature of a blockchain can be applied for a fintech world. A transaction happened in 2010, which was the first consumer transaction of Bitcoin, and someone bought a pizza for 10,000 Bitcoins, which is the most expensive pizza. Now we can even track down that transaction, which block it had, and what was the date and all that. That's the value of blockchain. You can trace back any transaction happened between the two parties or multiple parties in the history which is recorded on blockchain. Now, every industry, whether it is aviation, whether it is banking, whether it is education, because I did my MBA like back in 2001. Now, on LinkedIn, I can mention it that it was 2002, it was 2008, it was etc. etc. Traceability feature, if LinkedIn is on the blockchain, now how secure we will feel about each other's profile. That okay, if this person is saying he did that in that year from that institution, yes, he has done that in that, etc. etc. That's the traceability feature. Everything is recorded. It's like a mutable thing. You cannot change it. I have my LinkedIn profile. I update it on almost weekly basis. And I'm planning to come up with my version of blockchain profile. I'm thinking 100 times before what to put and how to put it, because that I know that I cannot delete it later. I need to be very certain, right? So every industry, they need some traceability of transaction or value exchange or information exchange. You name it and they require it. Blockchain is providing that thing, which is one of the very powerful features of blockchain.
So from a legal aspect, if I say compliance, how safe and secure is this traceability of yours? Like if, like you know, example you mentioned was of a big scale, the 10,000 pizza. If I talk about a private transaction happening, what are the chances of traceability on that, and what about the safety and the secure system for that?
Again, a very good question.
Is it legally binding, or are we following some kind of rules in your?
Yes, the legal binding is coming from regulators, and they are, in today's world, they are basically the governments. But here the regulator is what? Blockchain technology itself. Yes, now you mentioned that it was a very heavy, like a big transaction, and that's how we can transfer, traceable. That's why it is traceable. No, any tiny transaction, which is like a very milli kind of a bitcoins, if someone have done the transaction, or any other cryptocurrency or any other blockchain based transaction happened in the world, all are in the box, and you can do the traceability. They have their own particular hash which you can use, and it is updated regularly. Every moment you go on to blockchain.info, and there are some other sites as well, you can see what's happening in the blockchain, which information is getting added, which information is formulated by whom, what are the parties, what is the transaction value. You can, that's why we call it super transparent. Yes, anonymity is there as well. It will not show us it happened between me and Auntie, but it will show that, okay, this code and this code did this transaction, and that block has been updated. Now anyone can go in the history, 10 years, whatever the length of that blockchain is, go back and you can trace back, okay, what happened between this code and what was the value, when, where, etc.
Can I just add something to that, both on the sort of the legal aspect? I think the best analogy, my understanding is, this might be incorrect, you jump in and tell me, but currently, for example, if you were to instruct a solicitor to buy a property in the middle of London, you could ask the solicitor, can you please work out the route of title? And the route of title means going back to the original construction of the property. So in a country like the UK, where there are properties that are 300 or 400 years old, because there is a land registry where each sale or dealing in that property has been registered with the land registry, your solicitor can go all the way back to 1850 and work out that the Marquis of Cornwall owned that property in 16 Westminster Square and then subsequently sold it in 1896 to somebody else. And that's called the route of title, but the solicitor actually has to dig out the paperwork and instruct the land department or the land registry in England to give all that information. But there is a benefit in that, because he gets the covenant of the land registry that that information is accurate, and there are laws that say that if there's any deficiency in that information, there is some recourse to the land registry, which is an agency of the government. Now, I think the way the blockchain works, correct me if I'm wrong, is it's the same principle. Like, you want to work out who bought that pizza for 10,000 bitcoins. There's an entry on the blockchain, and it's much more quicker because it's electronic. So you'll do a search on your desktop rather than spending hours and hours digging through ancient papers. But the end game is still the same. You, as the buyer of that asset, ultimately know that there was a chain of transactions which verifies that it's clean and the ownership was correct, and you can actually assess the value. So you're not overpaying or underpaying based on prior dealing in that particular asset class. Correct me if I've got that wrong. So it kind of helps you a little bit, but I think fundamentally my perception of this is that if I was going to criticise this, who's standing behind that information? Can I verify that is accurate? Because I'm wholly dependent on the input into the blockchain itself, which is presumably done by some AI mechanism or somebody inputs it. Can you shed some light on that, Mike?
Yeah, I'll just add on the point here that it is readily available. It's more efficient to dig out that information. That's one thing. But more importantly, it's far more safe because it's not centralized. No one can hack it easily. Or if the hacking process can happen, but as I said, you have to hack again 200 nodes or maybe 2,000 or maybe 2 million nodes. That's another feature. It's encrypted. It's cryptographically encrypted, and it is super safe. Now the land records, why Dubai is shifting all the land records, why Estonia has already shifted the land records on the blockchain, because of this feature that no one can change their data. Once the land record is in like some other country, for example, anyone can hack that land record, even in the Britain as well. It can be done. They cannot claim that their land record is 100% accurate. Any hacker can go back in the history of 1850, which he just mentioned, can change it from 1850 to 1950 for its own gains. It is possible. When it is on the blockchain, it is not possible. That's the feature of blockchain. And he said that, okay, it is, we will come just in 1 minute, that why blockchain needs to be regulated. Yes, it requires some kind of a regulator to endorse that thing. At the moment, it's all technology. But it is not fed by AI. It is fed by the transaction people who are entities who are doing the transaction. They are just providing their KYC and other information. So it's again safe, but at the same time we believe that just like the land records are backed up by the Estonian government and by the Dubai government, it requires a similar backing by the governments to make it super usable and trusted.
Thank you both.
Thank you for that explanation. So I just want to follow up on the land department example. What I can't really understand is, so for the cryptocurrency example, the new block production is done by the miners who have an incentive because they will gain some part of a new Bitcoin and they will have money. Whereas in the land department example, how do we ensure, or how does the state ensure that new blocks are produced plus distributed to more than, I don't know, thousands of different ledgers?
Yeah, I mentioned in my presentation there are two types of blockchains. One is the permissionless and another ones are permission. When we talk about the use case of regulators and governments, they will use permission blockchains. Then there is no requirement of miners to endorse or validate those transactions. Now, who is the regulatory authority? Government itself. They are using it for the safety and trustworthy technology. They're not using it for the peer-to-peer networking. So the one fundamental of blockchain they take out. It's no more a peer-to-peer. No, not all of us can go in that blockchain and add our information as a buyer and seller. No. Then the regulatory authority is using that blockchain technology just for its one feature, and which is security and trustworthy information traceability part.
So maybe I'm missing some point here, but so the part that I don't understand is, okay, so it's central still, right?
In this case.
Yeah, they're just putting it on another ledger and they're just calling it, oh, it's now blockchain. So it is still central, it's not distributed ledger, it's not decentralized ledger. So it sounds more of a publicity stunt than a real blockchain. Maybe I'm missing a point there.
You're partly right. Partly they are using it as a technology which they can use. They can see it as a trustworthy technology. Like no one can go back in the history and change the land records. That's the beauty of the blockchain, and that's why they are using it. Fundamentally, blockchain was developed for decentralization. But now, as in my presentation I mentioned, banks are centralized authorities, governments are centralized authorities. They are using this as a technology. So they are using their own version of blockchain, which is a centralized blockchain. They are using the technology, they are not using the economic fundamental change of which blockchain is bringing. So yes, there are two types. That's why I emphasized on that slide that we need to distinguish when we talk about fintech applications. They are primarily on permission blockchains.
Sure.
Very few will find on the public are permissionless blockchains. Most of the applications you will find on the private blockchains are permission blockchains.
Okay. Thank you.
My question is to Muhammad about the blockchain. My name is Saeed. I'd like first to thank you for the valuable information, and if I would like to say you welcome blockchain to be adopted. In terms of business perspective, you have said now, which is one of the advantages of blockchain will be prevent the fraud, internal fraud. But of course, you know, this is not only, we don't have only a regulator, you have to convince the regulator first to adopt FinTech blockchain. Once the regulator convinces to adopt blockchain, it would be easy to convince the other commercial bank. Of course, you know, from the risk management, we didn't highlight how is the blockchain will be managed to eliminate operational risk, for example. Of course, we not only have compliance issues, we have also people risk, manual interventions, we have IT risk. All these issues is a blockchain would be covered. These are the first questions. Second question is, of course, we cannot eliminate any risk, but at least we need to mitigate this risk as well as we can. Therefore, we would like to please highlight how is the blockchain will be mitigate this risk. Third point, do you know any regulator bank in Middle East adapted the blockchain as well as a commercial bank? Thank you.
Thank you, Mr. Said. There's like multiple questions. First, the answer for the first two will be the similar one, because I'll give another key takeaway from today's session is that we are all familiar with FinTech now. We are here in the FinTech conference, but I give you another buzzword which soon will be happening, especially in your part of the space. That is RegTech, regulatory technology. That's the next level of tech-based for the regulators, for the people who are coming from the law background or from the pure out and out, from the like people who are coming from the regulation background, governments. Blockchain requires RegTech mostly now. It requires the endorsements of government, regulators, central banks, happening slow, because as she mentioned that governments always, regulators always are behind the innovation. Innovation is always faster than the government pace. So yes, it is happening. RegTech conferences, just in the morning I saw one, there is a conference somewhere happening in the America or somewhere like in the advanced world. RegTech conference is happening. I just heard about this word like a month ago, and now I saw today the RegTech conference happening. And what they will be discussing about the regulations for the technology only, and it is required not only for the blockchain. It's happening because now everyone is aware of the cryptocurrency and blockchain, but there are other technologies which can bring even more like a bigger advantages, but they are not regulated. So RegTech is it's like a field where you can explore and you can become an expert and bring value to the world. So that's one thing about your first two questions, that risk can be mitigated with the blockchain by endorsement of the government, but with the RegTech as a field.
But you have to say this, what is the control be applied to mitigate this point?
Like for example, I give you the example of a central bank, how they can use the, how they can regulate any kind of blockchain technology, blockchain or any kind of a technology. They will set standards. I give you the example of Dubai government as well. They are coming up with some of the projects. 20 of their departments are working on at the moment for blockchain application. But they are not using it without regulations. Yes, since it is not a regulated zone at the moment, they are parallel putting some emphasis on the regulation side as well. So they are very closely associated with the technical committee of ISO, which is, we all know that they are the body which is coming up with the standardization of different operations. So the ISO TC, technical committee, that also you can explore further, 307, they are working on the standardization of blockchain technology. And Dubai government is working very closely, all of their projects are working very closely with this particular technical committee. So this is one thing, that if you are bringing some new project in the blockchain or any kind of technology, work closely with this as a regulator. I mean, as a Dubai government is setting an example that they're not just coming up with their own standards. Okay, we are pioneers in this space, that not many governments are bringing blockchain applications. They can come up with their own standards, but they are working closely with international body, which is like doing a good thing. I think in next year we will be having a formal regulations coming up from the TC 307 of ISO, and there will be a lot more collaborations between the governments and the standardized body. So that's the area. A use case of, you mentioned, is there any use case of a blockchain by any credible bank? Yes, Emirates NBD, they are using it. They are into the proof of concept stage. Proof of concept stage is basically the prototype stage, that initially you build up at like a exemplary level some application, and then you scale it for, if the results are good, then you scale it to the other parts of the to the complete functionality of the organization. So the POCs, proof of concepts, are already done by Emirates NBD. There is Iraq Bank who has started using Ripple, I just mentioned. Bank from India, ICICI, something like that, they are also using it for the remittance from Middle East, not just from other parts, mainly from Middle East. UE Exchange, I gave the example, they are using it. And they're all at the POC stage at the moment, but eventually they will scale it to the bigger operations.
So Umang Dr. Ali, Digital and Rackbank. So just to add to that, so I think Rackbank is already using Ripple for sending remittances to India. And we were doing POC last year, but it's already live now. So we made it live Q4 last year. So we are already sending few transactions every day. And the idea is to actually scale it further and not to use it not just for India, but for remittances globally. Thanks.
Thank you very much for adding that.
But in this case, you will use a blockchain instead of Swift as a way of remittance, or would it be wrong?
As an infrastructure, the whole transaction is happening through Ripple as an infrastructure. So yes, the Swift was the infrastructure we were using before, and in my slide it was very clear that these are the entities or intermediaries which will be facing challenge with the advent of blockchain as a technology. So Ripple is a kind of a substitute for the Swift.
Good morning. Thanks for the very insightful panel. I have a slightly broader question, but before I ask my question, just to put it into context, I'm David Parker with the Economic Development Board in Bahrain. We've been doing a lot of work over the last couple of years to develop our own FinTech ecosystem. We're testing a variety of innovative ideas via the blockchain through our regulatory sandbox. We've launched crowdfunding regulation for debt, equity and Sharia compliant crowdfunding, and we're about to launch a new dedicated FinTech hub where we can develop more proof of concepts. But I still think that we're some way behind Silicon Valley, which of course has decades of experience as a hub for innovation, and certainly Finland, which is a country that I've admired for many years, again for being a real source of innovation regionally and internationally. So my question is what the cities, regions and countries represented here from the Gulf can learn from Silicon Valley, can learn from Finland. What your advice would be to us all in terms of driving our ecosystem moving forward?
I can take that. I think the ecosystem and the culture means so much, and what the companies can take from it. It's a two-sided thing. So it definitely requires a mindset of capital, because innovation is only going to be driven if there's capital available. A lot of people in Silicon Valley are very happy to deploy even a little bit of money in startups because they see the value. And they don't have a short-term thinking, and that's where there's a lot more innovation coming out. So I completely think that capital is a really big driver. I know there's a lot of capital in Gulf countries, but angel investors are not deploying it fast enough because they have a much shorter-term view, and for innovation to happen, it needs to be longer-term. Another reason, so that's the capital side. Another thing that makes Silicon Valley very successful is the regular public's mindset is about innovation. Every single person there is thinking about how can I improve this better? How can I be more efficient? And they know that if they have an idea, that idea will be supported because there are a lot of people who think the same way as them. So in order to develop a strong ecosystem in the Gulf countries, I absolutely think capital has to go with the mindset of people, because you can have very, very smart people, very talented technical talent, but if they don't have the capital to build companies, they're gonna go build that elsewhere. So I think they both go hand in hand.
Thinking about my experience from Singapore, Israel, Nordic countries, and then of course Silicon Valley, I think they have the same pattern. Government has provided funding at the early stage, and government should provide funding, but only for a temporary basis, and matching the funding that comes from investors. We founded the first governmentally supported fund in Finland. So actually, the first one in EU, with the terms that the reward was very different for private investors compared to governmental funding. And that is the structure. Less regulations, more money, and money only on a temporary basis.
Yeah, I completely agree with that. I think it starts from the top. Dubai is much more ahead and innovative because it has a very visionary leader, and I think that's exactly, the government has to set the tone, the government has to provide support. Canadian government does the same, US government deploys tons of capital that also encourages a lot of startups to come out. Another thing that I would add is that it's very important for universities and schools where there are younger people to put that in people's mind that they want to be entrepreneurs. So a lot of schools in the United States, a lot of schools in Silicon Valley would provide support to people who are going to colleges if they have an idea, to help them explore it, help them build a plan, help them navigate exactly what kind of government funding is available or what VCs are available, and that exactly is what drives the ecosystem. But I think the tone at the top is so important for government to really be the leader in providing that, okay, we're going to be innovative and these are the steps you can take and you have our support.
Yeah, I'll add on that, in the blockchain world, it's more than Silicon Valley. It's other parts of the world now catching up thick and fast. Dubai itself, and I was last week, I was on Blockchain Cruise as a speaker and had a privilege to be sharing the stage with the ex-Prime Minister of Estonia. Estonia is at the moment like coming up with the big regulations, and they are like providing they are the beacon at the moment for other governments, how the regulators, how the governments can bring in the innovation, and not just the blockchain, but other technologies as well. They came up with the e-residency program, which is till now is the only one unique example of application of technology. There is a Belarus just like couple of weeks ago announced that from 1st of March they will be coming up with the regulations of blockchain, not just again blockchain, for the whole technology. Singapore is already a hub. Switzerland is already a hub. So there are different. Gibraltar is one of the place where like the technology is like been regulated, and they are the more like beacons rather than the Silicon Valley when it comes to the technology, and especially with the blockchain technology.
I wanted to go back on the blockchain use cases. I mean, I remember 2014 we were writing the first analysis on 32 different use cases for blockchain. Now, after 3 or 4 years, things have been changing, and I think here we have been mentioning, I think, 2 things, right? One was international payments supported by blockchain. The second one was post-trade settlement operations. Now, one of the things which I've seen growing in Europe has been the application of blockchain in trade finance. And we have seen several consortium, some of them backed by IBM and others. So I want to ask you if you see potential in blockchain in trade finance, because I see many difficulties along the value chain, specifically for the digitalization of the middle documents, like letter of credit or bill of lading and others. So do you see potential?
Beyond potential, our company itself, like we are Zoflow.io, so we are an integrated trade and finance platform on blockchain, and with the AI features with it. So we are like coming up with the features of AI for the consumers and for the end parties to use this as a platform for trading and for financing facilities as well. And it's just, an alternate to the conventional financial institutions, and we are one of the use case, we are one of the application of blockchain bringing on the financial world.
And how are you managing the middle documents, which I think is a big issue? I mean, I've seen a few companies like Kuva for the bill of ladings, but there are so many other documents which are still there. I mean, and if you don't have a digitalization of those documents, how can you build a smart contract on top of trade finance?
Start is always a KYC. You need to have a proper background checks of all of the users of your service, which in this case is trading and finance. And that is the start. We just completed our tech till yesterday. We completed that part, that every user will have to enroll and subscribe, and they have to go through with the KYC process. It's not only us who are doing it. Other blockchain projects, credible blockchain projects, are starting their users. They start with this process. If they are credible, if they are legit, they start with the KYC and AML, which is anti-money laundering. Because in 2013, you mentioned about that era. It was back then blockchain, especially Bitcoin, was used for this Silk Road kind of stuff. So to avoid that, every credible blockchain project will start from KYC and AML practices. And that's what I can give my the example of my company, that yes, we are using it, doing it, and this is one of the major use case of alternative fintech.
That's good. Thank you so much.
Welcome. Thank you.
Oh, I think I'm conscious of timing now. There's another session, isn't there? So we'll probably wrap up on this one.
We've
and
already
take a break.
exceeded the time.
Okay.
Half an hour.
Lots of good questions, though. I think that was great. So I think a round of applause to the panelists for that.
I can still see faces with questions, so you can park the question for the coffee break. So now I would request Mr. Sohail to please present the memento to all the speakers. It was indeed very informative, and thank you. Thank you very much. And we are out there as an exhibitors, and feel free to come up and discuss anything relevant to blockchain and other things. Wow.
Oh.